Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions, bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Friday, November 12th. Thank you so much for making us part of your day once again and joining us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. Find all of our streaming sources there, Spotify, Apple Podcasts, iHeartRadio, so many more, Amazon. You can find us through your Alexa. Just search for Market Talk. Well, we had a pretty impressive day in the grain trade, grain and oilseed trade here today. We got a lot to discuss. Let's bring in our good friend Ted Seifried, Zaner Ag Hedge, joining us on the show for this Friday afternoon. And Ted, it's great to see you and hear from you again, my friend. How are you?
Hey, I'm doing great, Jesse. Thanks for having me on, man. It's always fun.
I appreciate you taking some time and joining us here today for the show. We got plenty to talk about, as I alluded to. We really had a strong day led by soybeans and soybean meal on Friday. Corn, wheat up moderately as well. And, you know, there was a lot of news chatter out there Friday. We had the University of Michigan Consumer Sentiment Index numbers were released. I know there was some news out there about shortage of the amino acid L-lysine that some people pointed to. That helped out the soybean meal market today. But a lot of things here. I want you to run us through your thoughts in soybeans and soybean meal, because to me, even before we got all that news, that meal market looked really strong today and really supportive for soybeans, Ted.
Yeah, and that's ultimately my narrative, and that's what I've been talking about for the last 2 weeks, is that soybean meal is really undervalued. We have feed needs in this country that are just as strong as ever, and we've cut the crush down dramatically over the last 9 months. The meal stocks have gotten really tight. We've exported a chunk of them, and my hog guys are having the darndest time finding that meal at a reasonable price. And so you kind of knew that the soybean meal was going to have to respond at some point, and now we've started to see that with a big statement breakout day there on Friday. And that pulls beans higher. Now, a lot of people attributing a lot of the strength to rumors of Chinese buying, which I think are probably true. I wasn't able to confirm that on Friday, but yeah, it's probably true. This is the time where China buys, and so that wouldn't be strange by any means. People attributing the strength to, like you said, the University of Michigan Consumer Sentiment, showing inflationary concerns and that there was inflationary money coming into the market. Absolutely. I think there was part of that happening there on Friday, and that's been a theme throughout for the last, more than a few months. So these are all bullish factors, but the big driver is the soybean meal. And I call it the meal deal. You don't necessarily have to have bullish underlying soybean fundamentals. If you get a meal rally, the beans are going to follow. And that's just how that works. We've had a lot of unexpected bean rallies, and 3 I can think of off the top of my head. Unexpected bean rallies are happening, and then you look down at soybean meal, and then you say, oh, I get it, right? And again, I think that's the market realization, something we started to see there on Friday. And I think there's quite a bit more upside potential there for that meal. Soybeans testing the upper end of that downward trending channel that we've been in since June. The last 11 times we've gotten there, we failed. So there are going to be those selling pressures probably early next week from your technical traders saying, hey, this has worked the last 11 times. Let's try this again. But I think this is maybe the time that it breaks, and it's because of what's happening in the soybean meals. And when and if that happens, that means soybeans have a fair amount of upside potential, because you break out of a long-term downtrend like this, and you've got some pent-up momentum. You're going to push the shorts out, run stops, things like that. I don't know. Are we talking $13 soybeans by the end of the calendar year? And that's kind of the way I'm feeling right now.
Well, and I think about as well, back to Tuesday's WASDE report, we got those numbers out. We lowered the soybean yield slightly, and that was all good for the soybean market. And, a lot of people were saying, well, this should set the tone through the end of the year. I wonder your thoughts on that WASDE coupled with what you just talked about. and what we could maybe see here in the next couple of weeks ahead as we go through the holidays, which typically, Ted, is normally a pretty quiet time.
Right. Oh, but great point on the report, Jesse. The trade was expecting a higher yield in soybeans, and we got a lower yield. And I'm even going to say that the trade, when you talk about the trade guesses for a report, really it's 16 to 21 analysts. I'm one of them that gives their number to the three major news agencies, and they use that and they put it together for a poll. Realistically, that's 16 to 21 people's thoughts on what the USDA should say on a report. The market as a whole has other ideas, and I really do think that for soybeans, the market was looking for a higher yield than what the average trade guess was going into that report. And when it actually got lowered, which really nobody was expecting, it took away a lot of the reason for us dropping 82 cents in the 5 trade sessions before that report. So we had to play some catch up there. But to your point, it sets the tone because we know that December WASDE isn't going to do much. It never really does. We know they're not going to do anything on production on that report. There could be some small tweaks on the demand side of things, but only if they feel really compelled to do anything. And generally speaking, it's just small enough to be a punt till January. So really, between now and the January report, what sort of bad news are we going to have? Or what sort of news in general are we going to have? We're going to be watching South American weather. But from what I can see, that South American weather is about as good as it could possibly get. If anything, maybe it gets a little bit more bullish. So I think there's an opportunity here for soybeans to go higher, for corn to go higher, for wheat to go higher between now and the end of the calendar year, just because I don't see where the major selling pressure is going to come from. Your producers are probably locking up their bins for the end of the year for tax reasons, for, hey, it's just this is the time where we kind of back off on cash sales until we get into January, February, and we start cleaning out before we get into planting. Yeah, I think we drift higher. It might not be big chunks like what we were seeing on Friday, but I see reason to go higher, barring some sort of major macroeconomic thing, which I guess this day and age happens every few weeks. But short of like biofuels, ethanol falling apart, things like that, I see a fairly clear path to the upside for the time being. And again, the soybeans are the ones that everybody's been so bearish on. Those are the ones that I think have more sort of explosive upside potential, especially if you get a South American weather problem. But corn's got upside potential too, and wheat there on Friday kind of lagged behind. It was well off its highs, but to some extent, a lot of traders and especially your professional traders have been using wheat as the long end of a long wheat short soybeans or long wheat short corn spread. And so when you have strength in the row crops, there's a little bit of unwinding that spread. But we had its moment earlier in the week. I think all three of them look good for the upside between now and the end of the year.
Well, I know on the wheat side, Ted, I know Paris wheat held near 14-year highs today. I know there was a tender announced by Iraq. I know that helped the wheat market a little bit. And you mentioned corn too. Corn, got some spillover strength, and corn's just kind of been doing what corn's been doing here lately with the ethanol demand and everything else just steadily creeping higher. And I know you mentioned, some producers locking up their bins here as we head to the end of the year. We know that happens. But for some of those guys who maybe need to make some sales before the end of the year for whatever reason for the balance sheet, we
Just
talk
extra
about
bushels that we weren't expecting.
Exactly, yeah. We
Yeah.
talk about some of this upside potential that is there. Would it be smart for me to lock in a floor and watch this market for another couple of weeks here to see if prices go higher?
Yeah, I mean, Jesse, you got to take advantage of the good prices. I mean, and just having a friendly outlook doesn't mean you shouldn't make sales, right? I mean, you want to be scaling in sales as the market rewards you. But to this point, I've wanted guys to be sold 65 to 75, even 80% on old crop, and up to 30% sold on new crop, and even maybe further than that on soybeans for new crop. So you want to be making those sales, but I am a fan. I know there's a lot of people that will argue with me on this, and I always entertain the argument because why not? But I am a big fan of re-ownership. I'm a big fan of owning calls either before you make sales or as you make sales to re-own opportunity. Because my thought process is there, what's keeping me from making a sale? And that's the opportunity for higher prices. Okay, but to have that opportunity for higher prices, When you're not making sales, you're leaving the door open for major downside risk. Maybe something does happen macroeconomically and ethanol demand falls apart, and all of a sudden, that corn balance sheet looks much different. And I mean, there's so many things that can happen that we just don't see coming. That's the nature of the future, right? So managing good prices and locking in profits is something you need to be doing. But then, owning calls, owning the board to re-own those bushels, looking to add to your bottom line, to add to these good prices that we already have. There's nothing wrong with doing that. So, marketing in this day and age, and especially with this kind of movement that we're having in the markets and at these prices, has to be a little bit more complex than just, I'm gonna sell this day and then I'm gonna sell this day. You really have to kind of manage your both sides of the equation, right? You got to manage the risk and you got to manage the opportunity. And again, there's different ways to do both.
Ted, weekly export sales came out today as well. Really, I didn't see anything major in those numbers. I know we're still lagging behind in some areas. What are your thoughts on the weekly export sales today?
Yeah, they were good numbers. They weren't as good as last week, and they were towards the lower end of the range of expectations, but they were within expectations. I continue. I know I keep coming back to the soybean meal, but I continue to be impressed with the soybean meal sales that we're making on a regular basis. But overall, I mean, the sales were good. They're there. You look at the shipments number. We see export inspections on Monday. But then the actual export number that we saw today for soybeans was a little over 1 million metric tons higher than the inspections number that we saw. That's a positive thing. Yeah, no, sales are good. And there's another thing. We talk about what would the bad news be between now and the end of the year. I think the sales numbers could get better. I really don't think they're going to get much worse. So, again, that sort of plays into, yeah, they're decent now, but I think they can get better. And if they continue to get better, and I think they will, there's just more reason for the markets to go higher between now and January 1st.
Ted, on the outside markets, I know we always like to talk about crude oil when you and I chat. Crude was kind of down, kind of seesawed a
Yeah.
little bit today, but what are your thoughts on crude oil and how that's relaying into the commodities?
Yeah, crude. The earlier conversation we were having about inflation happening on Friday. Well, we certainly did not see that in the energy markets, which makes me kind of wonder if inflation was the main driver for commodities as a whole, or for grains, really. But anyways, crude's a bit of a frustrating market because you got the really nice update earlier in the week. Then you have the key reversal that would have been on Wednesday, not a key reversal, but the big outside reversal down day where you made a new recent high, and then you end up closing below the previous day's low. Gives you a big sell signal. But then, Thursday we're down and we pop back up by the end of the day. And then you think, okay, well, we're going higher. And then Friday we were down and then we got back near unchanged. It's just very choppy. Now, this is a period of consolidation for crude oil. It's going to break out of this one way or the other. I continue to be biased to the upside, although my target in crude oil was always 82.40. We've achieved that target. So fundamentally speaking, I don't know if I need to see value above and beyond where we've gotten crude oil prices. I don't know if we need to add $10 to crude prices, but from a speculative point of view, when a market takes a hold of something like this, they like to push things further than what I would consider fair value. It happens almost every time. And crude oil is one of those markets that is the darling of the professional investor. So even your small scale speculator as well. So I think they're going to take another shot at new highs. I think crude is successful at that. But again, I feel like we're in the area where continued upside strength in the crude might be fairly limited.
We should touch on livestock as well here today. Yeah, I know you mentioned your hog guys earlier having trouble finding feed. Hogs were higher today. Some talk maybe higher cutout prices was helpful. China showed up as a buyer, even though on the export sales
Yep.
we were well lower than last week.
Yeah.
What are your thoughts in this hog market? I know it's been kind of a tough sledding, right? The last couple of weeks in hogs.
Yeah, I think this is a bigger, broader bottoming formation that's happening in the hogs right now. Fundamentally speaking, I can justify higher prices. In fact, I'm a little bit curious as to why we're not trading higher, which is kind of a red flag. But I get the fact that weights are a little bit high up front, so we know that marketings are a little bit slow. So I get the reason why the December contracts lagging behind a little bit. But with cash trading higher, with cutouts being strong enough, profit margins being good. I think there's upside potential into the mid to low 80s, 82 to 84 for that December hog contract. That's sort of my target area. And again, I feel pretty comfortable that we've got a really nice base built below us that we are holding. The end of the week, from a technical perspective, I think was pretty good. Actually, as the week as a whole, we found the strength early. We ran into very key resistance. We did have a pullback. We didn't really follow through to the downside on the pullback. And then there on Friday, we closed, half a buck higher, right on top of our 10-day moving average, right on top of that pivot point that we've been on. So to me, it looks like we're going to try to go higher early next week. And yeah, I see that upside potential. I don't know if it's substantial. Weights are going to kind of hold us back on that. But I do see a fairly healthy rally potential for the hogs right now.
Over in cattle, we had another good week in cash country. I mean, this market, last 2 weeks, we've shot, a couple bucks higher each week. And I know kind of a quiet end of the trade here this week, but overall, I think there's some good optimism in cash country out there for cattle right now, Ted.
Yeah, it's great to see the cash market advancing higher. I think we want to see that continue before we really get excited about the futures market. You look at fed fat cattle, and we are really very entrenched in this range between 130 and 140. Now, the bright spot there is that you really don't feel like there's much downside potential below 130 or even maybe 132. You feel like that's just sort of the floor, right? Unless, again, something very dramatic macroeconomically changes. That being said, the upside potential, it seems rather limited unless you see cash cattle, start making like $4 jumps and things like that. And while I do think the profit margins are there to do it, I'm a little skeptical that it will happen. And I think the market's really skeptical that'll happen too. So we continue to hang out right now. We're right in the middle of that 130 to 140 range. We've got a slight positive bias to that, trading 136 and change. But this just seems to be a comfortable sideways pattern for the cattle. Again, fundamentally, I'd like to see things go out higher. But again, I guess I feel like the futures market is waiting to see that cash cattle continues to go higher and would like to see some of those bigger jumps, I suppose.
Well, Ted, great stuff as always, and we appreciate the time. Any final thoughts you have for us today?
We talked about soybean meal, right? No, I'm just kidding. Yeah, a lot of talk about inputs, right? Natural gas is really, while I don't think the story's over there, there's been a very significant relief off the highs in natural gas, and hopefully that'll start to filter into input prices going further on down the line. Also, to the input cost conversation, Brazil's second season corn crop is going to give us a huge look into what our situation is going to be. And if there is a problem with inputs and they plant less acreage, well, that's going to make things very spicy for our growing season. So yeah, the input situation, the big proving ground there is South America. It's going to be the safrinha corn crop. So pay attention to that.
Well, no doubt we'll be looking at that and other things as we work through the next few weeks and months ahead. Ted, if folks need a little advice with their marketing, I know they can reach out to you there at Zaner Ag Hedge. How can they do that?
Absolutely, Jesse. You can reach me directly at 312-277-0113. You can find us on the web at www.zaner, that's zaner.com. You can read a bit about us. You can sign up for our morning newsletter. And aside from that, if Twitter is your thing, I'm at the Ted Spread on Twitter. I like to talk about whether hot dogs or sandwiches, race cars, ethanol. I've recently converted my race car into running E85, and it's got an extra 100 horsepower or whatever. But I like to have fun on there. I do talk markets as well, but it's a little bit more of the fun side of Ted too.
Well, follow him on Twitter. It's entertaining for sure at the Ted Spread, and learn more at zaner.com. Ted, we appreciate the time. Thank you for joining us on Market Talk today. Have a great weekend, sir.
Thanks, Jesse. You have a great weekend too. Thanks for having me on.
Ted Seifried with Zaner Ag Hedge joining us today on Market Talk. That's going to do it for the Friday show for November 12th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.